Ladies and gentlemen, welcome to Modern Investing with Sasha on IBM TV. And I'd like to introduce my esteemed guests to the panel. It's the founder of the IBM TV network, Nick Poleveda. Welcome to the show, Nick.
That's me. Thank you, Sasha.
For sure. And of course, Peter Bennett, who is our contributor and who is a graduate from York University and professional investor for many, many years. How are you today, Peter? Welcome to the show.
Hi, Sasha. Hi, Nick.
Good. Good. So today is a big day. Today, NVIDIA reports its earnings right after the market close. So as the stock went down in the last, half an hour or so. So I've used that opportunity to sell a couple of puts. Believe it or not, expiration is November 19 in 2 days. So I decided to take a little gamble, but I sold 280 puts. But even 280 puts, I couldn't believe I got a huge premium, about $3.70 for 2 days. It's not bad, let's put it this way. And if the stock will nosedive, I don't mind to have NVIDIA for about 275.40. It's my price. I'm content to do that. And once I'll do that, I will immediately sell covered calls. So this is my game plan. It's like when you play chess, you play e4. You already know what you're going to play. If your opponent will play e5, or if he's going to play c5 or d6 or whatever opening he will play, you have a little something prepared for that. So this is my game plan. And well, the earnings, normally they have a huge surprise on earnings day. And I don't see any reason why this day should be different. But we'll see in a few hours. Okay, yeah. Market is very unimpressive otherwise. And some people believe that the top either already been reached or will be reached shortly. But listen, it's all individual calls from well-known investors. And some of them contradict each other. Actually, all of them contradict each other. But that's a fact of life. That's how we should survive and make our own decision about what to do. I started to cut down a little bit on investment, except my dividend stocks are still there. Haven't touched those. Because I'm a very greedy person and I see some stocks like GGV who pays monthly dividends, that's the last one that I will ever sell. Even although the yield is going down big time because the stock keep going higher and higher, the dividends don't change. So maybe they will increase dividends, maybe not. I really don't know. But since I already have it anyways, so I decided, okay, I'm married to that stock for a while, so let it be that way. So how is your situation on the market, Peter? Let's start with you.
You summed it up in a way. To give you the big picture, and then I'm going to get into a lot of detail. I think I'm very concerned, or I'm thinking the market may be at a top right now, or very, very close to a top. COVID is fading as a concern. It's slowly, but it's things are coming back, and it will eventually come back. More cures, pills to solve it. The tax proposal went through, the small one, and I don't think that the market thinks the big one will. I would hope not, and I think that's dead. I don't think the liberals would have even allowed the small one to go through if they just didn't give up on the fact that the big one probably isn't going through. So these concerns are gone, but the big concern is stagflation or inflation, and that is growing for me. We're heading into 22. So first of all, I read an article. It said in the 1970s, major causes of stagflation were three: a dovish Fed willing to take inflation in order to reduce unemployment, government spending on new social programs and the Vietnam War, and an oil embargo and rising commodity prices. Well, That sounds a little similar to what we're facing now in maybe spades, because we have a very dovish Fed. They're very reluctant to raise prices, and they are concerned about unemployment. And although there's so many jobs out there, two, government spending is out of control, not only for the United States, but the world. And in 2026, I've been reading multiple places, Medicare is going to go into deficit. And those are off the books expenses. And that's going to hit big time. I mean, each year from then on, the government has to print money or tax to get the money to pay for Medicare. Social Security, 33, but it's tiny compared to Medicare. The government has promised free hospitalization, just Part A, to everybody over 65 for the rest of their lives. People are going to live 30 years or whatever, 25 years, on average, and hospitalization is incredibly expensive. Clients can spend $1 million, health insurance clients can spend $1 million in a year on healthcare. And the government's on the hook for all of it. It's promised it, and it can't really pull back. So government spending is out of control. Go ahead.
I have a quick question about Medicare installment by 2026. I'm wondering, there are some countries not too far from US, for example, Cuba. They have very good medical system. The doctors are quite sufficient. Why wouldn't US outsource the medical treatments to Cuba, for example?
Well, that's a complicated question. Well, I don't know. I think you're being humorous to a point, but a lot of people do go overseas for medical care if they want to keep their costs down.
It's called medical tourism. Yep.
Right. Exactly. Medical tourism.
Right.
But the reality is the United States has the best care in the world. People from Canada, for instance, your prime minister from Labrador flew to Florida for treatment. And I've heard more and more. I heard from a health insurance client, because I have a part-time health insurance client business. I heard just in the last week or two, they're Canadian. They were telling me real problems in Canada. They're saying, oh, it's so long to get even a primary care doctor appointment for them, and then to get specialists. I've heard horror stories about how long the waits are. It's a terrible system. So the United States is offering great health care. It's just extremely expensive. And that's we could have a show on that, Nick, when I'm available, because I could talk for
healthcare
minutes on why the United States has let these costs go out of control. There's so many things to do. But then getting back to the oil embargo, it's the same thing, except for now what's happened is the ESG, environmental movement is telling the oil companies, well, we don't like you, and we're going to replace you. So first of all, USAC, one of my investments, which on the side I'll mention, I pulled back to 3.5% because I'm still concerned about a dividend cut. It's paying about 13%. And I really like the company, but even if it pulled back, I'm hanging on. But I don't like risk. I'm very risk averse. So anyway, they said I read their financial report, the last quarter, and they said that they believe that the U.S. exploration companies are spending 40% less than they need to on CapEx in order to keep oil production just at the current level. And there is increased demand worldwide and in the United States coming back from COVID and everything else. Bank of America said they expect 120 oil. This could be even much higher than that because people are not going to adjust to higher oil prices too easily because we depend on it. So, but the oil companies are like, we're going to give dividends back. If we're going to be in business 10 or 20 years, we're not going to over-explore like we have in the past. We're going to keep things tight, and it's reasonable. Why would they? So between everything going on, plus some of the Biden policies that make it harder to explore oil, the shutting down of the TRP. Oh, I have to mention this. So Biden shut down the TRP oil line, which was ridiculous because pipelines are much better than trucks to bring in oil. And it just so happens that the amount of oil that would have brought in was the same amount we're now buying from Russia. So that's like, okay. So that is amazing to me. It's like we can get it from our ally Canada or we can get it from Russia where things are a bit rocky these days. They shouldn't be, but they have developed that way. So overall, I'm very concerned about inflation, and I don't think it's going to be short-lived. I think that it's going to be, especially, and even in employment, the government has, been people have a lot of money now from extra payments, and eventually people get back to work, but there's so many jobs out there. If you go longer term, jobs are going to be replaced huge in the next 5 to 10 years, which is going to be another crisis. And I'll just mention that this is a whole nother conversation again, but Stephen Hawking said, I read this week, and I read a lot about, how many jobs are going to be replaced, but Stephen Hawking said that AI, artificial intelligence, if it isn't controlled, will be the worst catastrophe in history. And I believe that could easily happen when you look at what's going to happen in 10 years. But for the next 3 or 5 years, there's shortages everywhere of labor, and the supply chain issues for the next year or two. So if inflation rises, that's going to make the market very nervous. And I know I've been going on a while, but I have to mention one last thing. The real reason they're nervous is because then at some point the Fed is going to need to raise rates. And if rates go up, the stimulus of having low rates is going to affect a lot of investors. Even and I'll mention the strategy. Right now, I have about 10% cash again because I had to sell things because they're either too high. It was, for different reasons. And I don't want 10% cash. I like to be fully invested. But now maybe it'll keep going up because I'm thinking, if I could get the 10-year or 30-year at much higher rates, maybe I'll just lock it in for 10 or 30 years. It's totally safe, and then some of these pension funds may say, oh, wait a minute, we can get higher. And my last point about this, and then I'll take it over. I know I'm taking a lot. But I was thinking about Fibonacci theory. And right now, the 10-year is about 1.6%. But the historical norm is 2.5%. And I don't know the period, but for many years now, it's been about 2.5, and then now it's incredibly low. So if you use like a Fibonacci theory kind of method, I think it's going to go at least to 2 or 2.1, and the Fed is going to do that maybe next year, and the market's going to get very concerned about that because again, is it going to go to 2.5, 3? It's the alternative to stocks. I'll let you say something. Sorry.
Okay, Nick. What about your view on the market?
Well, the thing is, Sasha, I have to admit that one thing you say, it's a lot like a chess game. Okay, and the thing is, that's how I play it. I'm going, well, it's like a chess game. How far are you going to see in advance, and what move are you going to make? So a couple moves that I made is I bought back into Pfizer, all right, and I thought bad because I actually sold it out. I thought Pfizer was over with, and I made a big profit because I bought it early on last year, and I thought, well, they pinnacled, so I sold out the position. Then I rebought, paying $4 or $5 more per share, because after getting the information in, I realized it ain't over. Pfizer isn't over, and my biggest gains so far have been Pfizer, buying it on the high, and it moved up higher. And the game plan is actually keep it a lot longer than I expected. XL Brands, which my game plan is to get rid of it somewhere next year, second, third quarter, because it's my only dog. But if you look at where are they in? They're in like this, a Peter Miller shirt, or these high end type of garments and stuff, Halston, and they sell well during the holiday season. So during holiday season, they're either going to make it or break it. And you usually know by about first or second quarter next year. And at that point in time, I go, well, they may have peaked, they may not have, and I may get rid of it. So far, it has a good trend. The other ones, I just keep all the energy stocks that we discussed because they pay a good dividend. But now it comes to IBM. Of course, I bought IBM. I got rid of it on the 135. I just bought at 120, and it went down okay to like 118. And I'm considering about buying more of IBM because the dividend's about 5.7%. Again, once you're a dividend holder, who cares what really the stock price is? Does it exceed what I can get in fixed instruments, which are around 2 to 3%? And that's a fixed annuity. On a fixed CD, you're looking at like 0.5%.
Yeah.
So when you got to compare the position what you can get with risk-free investment, and this is why Peter says if they ever go up, let's say the interest rates go up to 6%.
Oh man!
Why would you buy IBM that gives a 5.7% dividend? It's a dog. You see what I mean? You'd go back to the fixed instruments at 6. But I tend to believe what Peter says right now. For different reasons, they're going to keep a low interest rate environment. So the dividend stocks actually become very attractive to conservative investors. And Sasha, I stay away from all the hype, the Teslas and the AMCs and the, what was the other one? They had all these crazy GameStop. That was it. Thank you, Peter. So I stay away from the crazies, and I just go to the try and true places. Now that's not everybody's cup of tea, but it works for me. But it may not work for everybody else. So
let's have 1 minute break, and we will continue right after that.
Oh yeah, and when it comes to the break, also the chess show has been getting a lot of good looks lately.
Yeah. World Championship match is coming very soon in a few days. So of course there is a great attention now to chess and what's coming up. But we'll talk about it on Saturday show. So in today's environment, first of all, Nick, I have a question to you. From dividends point of view, don't you think that AT&T may be just as good or maybe even better than IBM? What do you think?
You may be right. I didn't put ATT on the list. I looked at it just briefly, but and when I bought IBM, they went and they did what happened with FireEye. They just got rid of one of their divisions. And apparently when that happens, when there's a spinoff, it puts downward pressure on the stock. FireEye, once it's almost like, well, okay, they get rid of a division. And that's what happened with IBM when they do these spinoffs. And GE's about to do if they haven't completed a spinoff. So, and that's become a very popular tool with large companies. It used to be everybody would go underneath one umbrella, and their theory is your management technique is better than anybody else. Well, that apparently is a Jack Welch non-believer. All Jack Welch did is fire people anyway. I guess that management technique was good. But
good.
What? Okay, you have comments on Jack Welch?
No, I have comments on AT&T.
Okay, AT&T. Yeah, I looked at it. I didn't buy it, but I certainly want to hear some opinions on it. So I'll put Peter up.
A few points.
Yeah, talk to us about
IBM.
AT&T.
I have mixed opinion on. I wouldn't touch it myself because I think it's a real sort of battleground stock. They may do well. They've struggled for years now. But AT&T, I definitely would not touch it, and I'll give you a few reasons. One, there is so much competition in terms of you hear it every day. Oh, you can get $20, cell phone service. You get $30 cell phone service. This is not good for your business model. Plus, I'm very concerned about, and this is why I don't even touch Verizon, because the third one, not Sprint,
T-Mobile.
T-Mobile, thank you.
Yeah.
T-Mobile is which is owned by a German company largely, but T-Mobile has a ton more of spectrum bought than Verizon and AT&T. They're way ahead in the spectrum business. So when we go to 5G, they may put a lot of pressure again on AT&T and Verizon because now you've got the spectrum and they have to pay for the spectrum. And there's been some auctions where AT&T and Verizon paid a lot for spectrum. So it's a brutal competition, and I'd much rather be in Canada because a major holding, I think I'd have to check, but maybe 5% or whatever is TELUS. They have a fabulous company, great history of dividend increases, great history of growth increases. There is a competition in Canada, but even one of the big ones. I think RCI is being
No,
bought.
Canada, one is for Canada, another one Rogers.
What?
But Rogers is a conglomerate. They have cable, they have.
Well, there's BCE, there's TELUS, and RCI is now being merged, either buying or being merged with the third carrier, which is exactly what the government doesn't want because there's less competition. But TELUS has a lot of landlines, and and the other areas too. They're more locked into their areas because they have a lot of landlines delivering internet, and so. And their it's just like clockwork, increase, and they've already projected large increases. So I'm not touching AT&T for anything. TELUS, I'm happy with it. I have a bit of BCE, 0.5% in BCE. Also a very good company. If I didn't have TELUS, I'd probably have more BCE. But I'm betting on TELUS as the #1 winner there.
I totally agree with you. I never touch all these companies for two reasons. If you're talking about dividends, and you have MPLX, then why would you need either stealth companies, right? And if you're talking about high tech, then there's NVIDIA, and no stock can compare it to you can compare it to NVIDIA.
Yeah, you're right. So, why deal with the competition? There was some very interesting news on crypto. We always do a quick segment on that, and this is worth noting. So. First of all, when I talk about crypto, I always mention John Paulson said it's a scarce supply of nothing. Second of all, about 2 weeks ago, I read about, I don't know the exact timing, but there was something called Squid Crypto. So Squid Crypto was based on the Squid television show, something like that.
Squid. Yeah, I saw it. It's horrible.
Yeah,
I saw the first couple minutes of it. And, I guess if you're 13 years old, it's a great show. But if you're older, it's a waste.
I actually canceled Netflix.
I'd rather watch Godfather than this.
Yeah,
so
anyway,
anyway,
kind of waste.
So they issued the Squid Crypto. It went up 300,000% to a high of $22,586. This is all within, I don't know, a few weeks, roughly. Wait, we're not finished with the story. Then from $2,586, it went down 99.99%, all within a few weeks, or very short period. Anyway, I don't know the exact time frame. To
Peter, it's a mother of all. It's a mother of all corrections.
What happens is what happens is people bought into excitement. Then they figured out it was a scam, and they sold because it was always a scam.
Tulips in Holland, and it's Beanie Babies in the 90s, and Beanie Babies went up to $1,000, and they went down. So it could go to $1 million or zero, but there's no fundamentals. But here's the point I want to bring out about the recent news. So I haven't studied this.
By the way, that's a great story, Peter.
Yeah,
about the shoot up and shoot down. I've never heard of it.
I mean, it tells you better be careful in crypto. But this is the story that I've kind of been expecting. And the Bitcoin market so far, it went down when this came out, but now it's up a little. It's like it's ignoring it. But listen to this. I just read this today in anticipation of the show, and it says Biden's new infrastructure law, I'm paraphrasing, will require brokers, cryptocurrency exchanges, to issue a 1099-B. In other words, crypto exchanges will now be required to notify the IRS directly of crypto transactions. This in turn will create, and if that's not enough, this in turn will create reporting challenges for many crypto investors. For investors who own their own crypto wallet, the information will be prone to inaccuracy. It's like, I don't know if investors know this or not, but
they don't.
I would not be holding crypto, particularly now, although maybe it'll go to $1 million. But this is terrible news for crypto because every time you use crypto now, the government is going to know about it, and they're going to tax you if you make a profit, and you have to keep records on it to make sure it's accurate. Why would anybody want to hold this? And I'd add one more point. When the government comes out with a digital dollar, the government, U.S. government, maybe it'll take a year or two, and China already has done this. And, there's obviously so many cryptos out there and everything, but the countries are starting to develop their own digital dollars. So why would you want to own crypto? It's like, so the whole thing is Beanie Babies.
Oh, from what I understand,
Wait,
also.
let me understand something. So you have, for example, let's take very simple thing. You have a bunch of, say, Bitcoins, okay? And through Coinbase, through exchange, you've changed this for X amount of, say, Ethereum crypto, okay?
Mhm.
So now, so Coinbase should report this transaction to IRS, correct? So do they supply the name of the person who did this transaction? Now, if
That's
so,
my
then
understanding.
Yes.
but wait a second. But what's tax being paid? But let's say you exchange 10 bitcoins to 100 Ethereums, right? So you're
Right.
paying tax on both Ethereums and bitcoins, or
If I
just
sell if I sell a stock and I make a profit and I roll the money over another stock and I make a profit,
Yep.
it's all capital gains.
Yeah, it's all capital gains.
great. So
TD
now
Ameritrade sends me a report.
wait a
Yeah.
sec. So there is a second part of this transaction. When you exchange this 10 bitcoins on 100 Ethereums, for example, now you have to go back and report at what price you acquired this 10 bitcoins
Right.
initially. And then on the difference between acquisition price and the exchange price on Ethereum, you will have to pay, and that tax could be tremendous. But
Right.
but
Well,
I
yeah, 2 points about what you're
I was
saying,
not.
Sasha. 2 points. One,
It,
the brokers are
yeah,
supposed to keep track, but there could be it's prone to inaccuracy, it said. So you don't want to pay a huge tax. I sold $150,000 worth of Bitcoin and they're saying it's all taxable, and maybe it's not. So I have to keep very close track of my basis. But the other thing is the tax is based on, in the US, it'll be capital gains, short term and
Right.
long term, which I have to check now because I don't know. They changed it slightly, but it's roughly maybe 20%. Depends on your
Yeah.
tax bracket too. But so it's complicated, but it's not like a 50% tax, but that's a substantial tax. But the whole point is, which would I'd rather have, dollars or Bitcoin? I don't have to report if I spend $1, but I do have to report if I spend a Bitcoin. So
Well,
in my opinion, it's not even taxation the big enemy of this universe. It's the mere fact of reporting. So you have to report
yes,
initial acquisition
both.
cost,
It's both.
disposition cost. You have to, your accountant probably he doesn't even know how to report it. So your accountant has to go to internet and figure out how to deal
Yeah,
with
you're
this.
right. You're right. Totally, Sasha. The reporting is. Now
Same.
that the IRS is getting a copy of your 1099-B, and they
Right.
know who you are, they know if you're selling drugs or if they know whatever, they can find out what your transactions look like. But also, so no, they know the reporting end, and you have the tax end. So this is not good news for crypto. And by the way, the last point you bring, well, it's not just about the revenue, but I don't know the percentage, but I know the Democrats had to raise revenue, and whoever signed the infrastructure bill in general had to raise revenue. So there's a certain component in that bill that the government is depending on now.
Right.
Whether it's 100 million or whatever to pay for this infrastructure bill. So they're going to collect the money.
They want to collect it. Yeah.
Yeah, of course they want to collect it, and they probably miscalculated, because if the market collapses, they won't collect anything, and over time, and it might collapse due to this, but we'll see what happens. But I would have expected a bigger reaction initially, but I'm just reading this for the first time today, so I don't know what, even the article is November 17th, so today.
Yeah.
Incredible.
But it could have a
What's
huge.
your take on that? Because
Yeah,
it's really
it devalues the currency. The honest thing about crypto is that it was a tax evasion tool. I mean, the thing is, I have a crypto in here. There's no record of how I got it, what the basis is, and I can use it to pay you, Sasha, to help develop the chess stars. And you take it, you just don't report it, and we all shrug our shoulders, and that's basically it, and no one knows. And that's been a big problem, because people could acquire it, they could sell it, no taxes. And I know that goes behind the scenes all the time. They'll never say to you, well, we never advocate that. But that's what they say, but behind closed doors. you know, because I used to deal with these things called bearer bonds. You probably remember them, Peter, years ago.
Yeah, I know what you're talking about. Yeah.
Yeah, I had clients that had bearer bonds, and they go, well, we just won't report it to the government because they don't know who the ultimate owner is. Now, what they didn't know, you could actually research it and find out, which I had to do on a case in South Florida, which we won a judgment for $800,000 against this guy, because you could actually find what they call CUSIP numbers on the bearer bonds. Oops, they didn't know about that, but we dug and found it. But I've had clients having offshore bearer securities, like in Costa Rica, had this cologne which was not reportable, and so they trade a lot in bearer shares. So when you're dealing with
In the
crypto,
Bahamas, it's very popular, but used to be
yeah,
popular.
yeah. So tax evasion is a very popular tool among wealthy people.
Oh, yeah.
Yeah,
Some
right.
people, well,
Right.
not just wealthy people. I mean, but also again,
Well,
maybe
poor
drug
people don't have any
dealers,
money, so
criminals,
they never deal in it anyway. You know,
criminals, people who want
sure,
to
and
take
criminals, and so it's a
want to
great.
take
But
ransom for
it's a great.
software because they're holding the company hostage.
Hey, listen, it's a great currency. Now, in Asia, from what I understand, banned crypto. But let's put it this way: if you can create your own currency that has no government oversight,
Exactly.
and you
It's
can
insane.
deal in it. And then the other problem I have with it is that it may be technically a security. Remember, Peter, that old SEC versus Howey case, an investment enterprise with expectation of profits, with solely derived by the efforts of others is security. Period. The end. Well, what the heck is this? It's a little coin that they always show some guy in a computer going do like he's doing something. What the heck is he doing? He's mining. Well, that's ridiculous. I'm on my computer. I'm mining your thing, so now it's worth more.
Oh, Nick,
Baloney. Look,
I
I don't buy BS
just
like
brought out
that.
another point. Very interesting point. So China banned mining. So
Yeah.
and the reason they did it is it uses a huge amount of energy, and that's another thing about Bitcoin. It's
Well, explain
unbelievable.
to me what this mining
Wait,
stuff
let me
is.
finish. Let me finish the point though. But so China banned it, and it uses a huge percentage. It was using a decent percentage, like 0.5% of all Mongolia's power. And there's a big power issues, obviously, oil shortages. We didn't even get into all that, but there's issues with energy, obviously, and pollution and everything else. So now the mining has moved to the United States.
Yeah, it's an incredibly stupid concept. Imagine we create a chess crypto, and what you do, Sasha, is you create all these different chess problems that are placed inside the computer system which this represents, and you keep redoing the chess problems over and over again, and then you say it's worth more because look at all the chess problems we solved. All right,
and we could do rooks and pawns are different values.
Yeah, rooks and pawns have different values, and you just create an artificial mining system, and everybody goes, "Oh, it's worth more now because you did a scholar's mate or something like that on your computer program, which my crypto carries." This is the dumbest thing I ever heard since there was this old plan in law called 419 AF6. Had a lot of people come to me and say, "You got to do this plan, got to do this plan." I did my research. I said, "Look, I can't understand it. If I can't understand it, explain it to the client. How does it work?" Well, lo and behold, after 10 years, it didn't work. And the government threw out all their concept of what they thought it was.
Well,
so
you know what? Let's
move
on. We're
Crypto's
running
a
out
waste.
of time, Sasha. And I
Buy
wanted to
Tesla
cover
before
a
crypto.
dividend stock, an interesting thing I did or two. But leaving crypto behind, I mean, who knows what it'll do? But everything tells me this is a very endangered market. But that said, it's so irrational anyway. But so on dividend stocks, first of all, I lowered ILPT. They're a very nice company until one thing. It was 2%. It was paying 5% dividend. They're just warehouses, and half of it was in Hawaii. So I felt extremely safe. So they go out. I believe the numbers are right. They're a $3 billion company. They go out and take over MNR, Monmouth Real Estate. And what was interesting about that was Monmouth is a $4 billion company. So the smaller company is taking over the big company. Now, they pay $21 a share, and I didn't like Monmouth as much. So they've had a nice, beautiful dividend growth history, and it's still warehouses, but they're outside of Hawaii, and it's probably a solid business. So I reduced that to 0.5%. I still like it, but I don't like the deal at all. And I think it's going to be years in digesting. So I'll collect my 5% eventually. Hopefully it'll start appreciating again. But then another thing I did is EIFZF. I mentioned this once before, but I want to mention it again because it's very hard to find any place to get returns these days, in terms of dividends and dividend stocks.
What's the name of this company again?
Oh, thanks. I was about to say it. Exchange Income. And
EIZF?
EIFZF. It's a Canadian company. And
You
their
look at
primary
this thing.
business is they supply ambulance services and flights to northern Canada, like Manitoba. I think a place called Nanuet. I'm no expert.
Yeah,
in
I know where
North.
Nanuet is. Yep,
Oh, you do?
North
Okay.
West
I
Territories,
don't.
yeah.
way the heck up there.
Yeah.
Right.
So,
Middle
so
of nowhere.
these are, to me, I view it as necessity-based flights.
Right.
You know, I mean, these people need
No
food. They
competition
need
as
to.
well.
There's no competition. No.
Right, and then, yeah,
Nobody
I
wants
don't
to
think
fly
there's going to
there.
be anybody invading the Nanuet airline market in the near future. So,
Yeah.
assuming that's
People
the case, and
prefer
then
to
they
fly
also.
to the Caribbean.
I'm sorry, what?
People prefer to fly to Caribbean instead.
Right, that's
The
true.
Nanuet.
Yeah.
Yeah, I would agree.
Yeah, it's probably higher volume.
Well, is there any profit in these flights, though, Peter? I mean,
What?
that's my question. Can
Well-
they make any money on those?
Well, let
weird
me
routes?
finish on the company. So the other
Okay.
thing they do is they, and then I'll answer questions. But they also manufacture airline parts and engineer. But if you look at the company, first of all, not only do they have 5% dividend, they're a price to cash flow of 7 times, which I look at that they're earning 13% in cash flow. They've had a great history. If you look at TD Ameritrade, their annual growth per year for 5 years annually has averaged on revenue 7% and on dividend 6.5% roughly. So this is a very nice history. I only went for I raised it from a third to 2/3%, somewhere around there. But this is the kind of company I want because it's not exactly correlated with the market. It's an independent company. It has the potential to keep growing for the next decades. I'll take 5% with a good chance of growth.
Right.
I mean, they're obviously running the business well. It's been very successful for their history. And again, it's a specialty business. It's a niche business. So I like FZF. Again, not a huge amount because it's a small company and you don't know, what it is, but it's always nice to put as many pieces as you can that are going to earn you 5% in a market where right now
Peter,
you can get
Peter,
1%.
I have a question though. So the company keeps growing, and you expect it to continue growing in the future. What's the growth based on? The more people are moving into that area of Canada, so the more they need more
global warming.
And
people moving into Canada because of global warming.
I agree with Nick. Everybody from New York is going to be living up there soon. It's getting
because it'll be a normal temperature.
Yeah, no, that's funny. Anyway,
that's the only reason I think Canadian properties.
You know
may be
what?
worth something.
If a company's a half, I don't know exactly. I mean, I've read about them, but I'm not an expert on EIZF because it's a 0.5% of my portfolio or around there.
Sure.
So I mean, I have my very systematic fundamental analysis method. I look at multiple sources. I look at cash flows. I look at the dividend. I read about qualitative things like articles about the company. But to focus on a smaller investment, I can't answer everything. I don't know how they've been growing. Maybe they're adding more flights. Maybe they're selling more parts. Or maybe they're raising their rates. I don't know. But then they could be acquiring some companies. But their debt is low, and it's a pretty picture. So. I put through everything, and I also love to look at, by the way, who owns things. That's always part of my analysis. So if I see Goldman Sachs own something and they own a couple $100 million, like some of the pipelines, it's like, I like that.
Yeah, but Goldman Sachs doesn't own EZIF.
Oh, no.
Okay, but here's my problem with your calculus.
It's very hard in Canada to even know sometimes who owns these companies.
Here's my problem I'm having with your calculus, Peter.
Sure.
You're in love with this company that gives a 5% dividend because it has growth and it serves us weird places in Canada. Okay, it has a niche business. Yet IBM right now has a 5.7% dividend, and you're telling me it has no growth opportunities? It's going to go down like a dog?
All right, back to IBM for a second.
So if I had a choice between a 5% dividend in IBM or 5% in these weird airlines that go to the middle of nowhere in Canada, I would go with the IBM 5%. Wouldn't you?
I'll tell you why I see more risk in it. Let me answer the question.
I want to hear Peter's answer.
Nobody has no competition. Nobody is going to fly there for the next 150 years.
Because you can't make any money flying there.
Wait, Sasha basically giving you
own 100% of that market.
They own 100% of nothing. you know.
Yeah,
You know
that's
what?
true. Yeah, but
Sasha's saying what
IBM
I
is
want.
a highly competitive market. That's a problem with
Yeah, you
IBM.
know what, Sasha, you almost totally said what I was about to say, which is there's a lot of competition for IBM, but let me be more specific. I'm concerned that Google or Microsoft or Amazon maybe even are going to eat IBM's business over time because these are monumental companies that I like all of them, except for I'm out of Google right now, but I have Microsoft and Amazon puts that I've sold. And these companies are tremendous growers. They have so much money. They can eat these companies alive. And let me finish with this point, just to give you a scale, because I was going to say this too. So I read this week Amazon, which I sold 4,500 puts on a long time ago for 2023, and I covered them with 2,200 puts. But they spend more on CapEx than Microsoft, Walmart, Target, Costco, FedEx, and UPS combined. That's how much Amazon is spending, and Microsoft is spending a lot. So these companies, IBM's like, these people have so much cash they could eat our business up, and maybe they won't, but it's a very changing area, and I'm not expert in tech, so I don't understand. If I was a tech expert, I might like IBM, but I'd have to really go deeply into why they are going to succeed, and their history isn't so great.
Well, that's because
So here's a
the only
scenario.
reason.
This is a scenario exactly for you. If Amazon will go after IBM to take it over, they will make probably hostile bid.
Oh yeah.
They'll buy it for $200 a share. That's how you're going to make money on IBM.
Yeah, but Amazon would probably rather say, you know what, we're going to just duplicate one of IBM's services, and we don't have to pay anything, and we'll be.
Well, they already do. They do Amazon Web Service. It's their biggest profit.
That's right.
Yeah,
That's
their profit margin. But see, notice what Amazon did. They morphed from what they were originally intended to do, which is sell books on the internet, to getting involved in other things. Then they found a profit center, which is Amazon Web Service. That's like selling hard liquor as opposed to the food. You make a lot more money on the liquor. So they found that and they morphed in. So here's my arguments for IBM. Now realize we started now 5 years ago with working with IBM. That's the reason we had IBM TV for so long. Okay. And we got to spend some time with the management, and they do have management issues. There's no question about it, which is one reason we want to be independent, mainly because it's hypermania control. It's hard to describe, but Peter, you shook your head. Did your attorneys approve that head shake you just made? I mean, stuff like that went on with the company. I'm not kidding. I was
just going like this in a circle.
Yeah, right. So the thing is, but here's the thing. Aside from all that, okay, here's what they have. They have a huge customer base. They have the ability to morph. They have a huge cash base. They have the ability to move in different directions. They just bought Red Hat, and the guy quit. His name was Jim Whitehouse. He's actually here in Raleigh, and he became president of IBM. Then he quit. This is what I'm talking about: management issues. Why would a guy who built a multi-billion-dollar company just all of a sudden quit after you're president of that company? So they have some internal issues they haven't. But if they were able to solve that, that's the big if. Yeah. Then they have this huge base they could expand on and be extremely profitable and successful. But the biggest enemy IBM has right now is IBM. Yeah. I'm not kidding. They don't have competition. They looked at the enemy. It's them.
You know what? I mean, look, they always say if you make money in 60% of your, investments, you'll be rich. And I think I've averaged a lot higher than that. I've made mistakes. Yeah. I made a few, but then again, I did it my way. No, I'm joking. But
at least you had fun doing it, right?
Exactly. Somebody said that before. But you know what? I mean, but I don't like to. I like to be more certain when I go into things. And again, I've made some mistakes over the last 2 decades of investing, but I haven't made that many. And when it gets risky, but let me say this, Nick, and then I've got to go because I actually have a meeting soon, but which is unusual, but I do have a 2:00 meeting. But I will research IBM and try to dig a little deeper into my opinion because
please, before I buy more stock,
5% and they really have promise. I love 5% dividend stocks, especially potential growth, and that's what we offer, on the show, and that's what I want to offer. So take it over, Sasha, if you can finish up because I got to go.
Well. Listen, the beauty of the stocks is that they are here today. next week, next month, and even next year. And if you miss your opportunity today, you can always go to that next day or next week. And I hope that this week will be productive for us. And let's meet again next Wednesday. It's right before Thanksgiving in US, and we'll celebrate, and hopefully we'll get good results in our investments during this time. Thank you so much. Thank you so much for participating, and see you next week. Bye bye, everybody.
Bye.